What's up, guys? This is Carter Thomas with Coin Mastery Bull Crusher Run, ready to dominate. Welcome back to the daily videos. Make sure you go and sign up for the email newsletter at coinmastery.com/invest. Get your free PDFs, get on the newsletter list, all that good stuff. What a difference a day makes, as they say. Now before I get too fired up about this, one thing I've learned is that there's some very important expression about not counting your chickens or whatever. This is a good thing, a good situation for that, where for all we know, this could just be a bounce and then it could come back down to who knows where. So, you're not seeing me celebrate full out, but overall, this looks good for now. Whether or not in the short term it goes down, whether or not in the long term it goes down, I don't know. But seems like it's better news than we had yesterday. There's more of a potential, there's more support than it looked like yesterday. So, but like I said, not going to get too crazy. Now, if you were watching, there's a lot of crazy action early this morning, at least on the West Coast. Truth be told, I woke up at around 2 o'clock just to make sure that, see what was going on. And I woke up right around 3,000. I was pretty sure that was it. That was the end of days. We're going straight down to the abyss. Looked like it popped pretty good. And you see this pretty unbelievable. I'm on the 4-hour candle right now. And you see this thing just really came back crazy strong. The other thing that's always, in many ways, I would say reassuring, but seeing this volume spike, right? When you see a huge spike in volume like that, typically that signals, at the very least, a temporary transition. You always see really high volume whenever you see big transition periods in the market. So that's a good sign. This mother of all engulfing candles is also a good sign. That being said, there are a lot of things that could make this go down to who knows what. So I don't think, you guys know me, I'm not black and white about anything when it comes to these markets, but at least a little bit of reprieve. And one of the best things you can do today, if you haven't already done this, is write down what you learned from this, what you would do differently if this happened or when it happens again, because it will at some point. I mean, hopefully we're way up higher and it happens and we can capitalize on this again. But while it's still fresh in your mind, write this down. I do this with the notebook. Just write it down. Write down what you did well, what you didn't do well, what you executed on, what you didn't execute on, what could have made this situation a real home run for you the next time it happens. And the reason why you want to write it down is because our brains are going to naturally block this from the psyche unless there's a reason to remember it. Like we forget painful experiences. That's why people make mistakes over and over. I personally think that one of the big reasons why I remember this July dump so clearly is because I was recording these videos. It was kind of an unintended consequence, but I remember recording them, and therefore I remember what I did and what I didn't do, which helped me a lot here. I'm not saying you got to go record videos. I'm just saying write down and record the last 24 hours for your own sake, so you can look back and whatever. But like I said, this could easily keep just tumbling down. It could go sideways. I don't think it's going to go straight up at all, and I'll show you why. But it's relieved some of the pressure, some of that bear downward pressure that was happening. So the reason I don't necessarily think it's going to go straight up, and this is, again, guys, please do not take this as technical advice, or don't take any of this as financial advice, because it's not, right? It's just me, some dude in an office helping you guys, or doing the best I can to help you make better decisions. But when you look at some of these charts, which I don't really make decisions on these charts, but I do look at them as data points for how I'm viewing the overall market. And what I'm looking at, if you're listening to the audio, is the moving average, the MACD, and then the RSI, which is a relative strength indicator. And if you want to, you can change the different periods that you're measuring. I tend not to. Many traders do. I'm sure there's pros and cons to doing that. But what a lot of this shows, the moving average chart, for the most part, very simplified, it shows you the momentum of the trading relative to historical prices and levels. Meaning, are we trading at a very, very high level relative to what a natural growth curve would look like? Are we trading at a very, very low level relative to what a natural growth curve would look like? And so, assuming that all markets eventually come back to a mean regression, meaning they end up following what is considered to be a true growth curve, economic fundamentals, the more it deviates from this middle line, the more it will eventually come back to that middle line. So what traders can do, and technical traders can do this much more effectively. So if you're interested in this, go look on YouTube for how to really dive in. But you typically want to look at larger time frames. If you're looking at more trend-based stuff, you can look at like the 60-minute, but that's more for like a short-term trade. And when you see these two lines coming down below this center line, when you see the blue and the orange coming down below the center line, at some point it's going to have to come back up. And that's going to be a signal that the momentum is going back up to the trend line. The blue line is the short-term average, and the orange line is a longer-term average, meaning the orange line is going to move at a more kind of fluid, generalized pattern, and the blue line is going to be more volatile because it's more short-term. And what you look for, again, this is very oversimplified, but it's helpful, is when this blue line is way below this orange line, and then it shoots back up, crosses over, and then drives the whole thing to go up, 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 back over the middle line, and then continues to go way to the top. And then you see it cool off, and then you see it again. Right? So if you look back at July, the last time this really happened with enough momentum to drive it through, you can see the kind of growth that we saw in that period. Right? Same here. It went from below to the top. We saw a massive bull run. Now that we're so far below, in theory, this chart with these levels on the 4-hour would point to there is a bit of a switch in momentum. Now this thing came down pretty quick, so I'm not sure. It might peter off for a bit. It might come up slower than people think. I don't think it's going to shoot immediately back up. That's why I think that this is going to go sideways for a little bit. And I don't even know if it's going to go sideways up. It might just go sideways down. But I don't think you're going to see the immediate skyrocket on this. But this is what you look for. A technical trader, if they looked at this pattern, they would find their time frame. They would look for this blue line, or they would look at the short-term average to be below the long-term average, a big divergence, and then they would look for the short-term to come screaming back up, cross over, and then push this thing back up across the line. And then you would buy right around here, actually, like right when it crossed over, knowing that that's probably the best confirmation that it will continue to go, as opposed to buying down here when you don't really know if it's going to make that crossover. So that's the first thing, technical wise, I look at, or I should say the volume was a big one, because that to me showed that there's some point in line drawn in the sand. The second thing was this momentum. Now, for me, this came down a little quick, as did this bear run, and just based on the way that this curve tends to work, I think that that may have to get worked out as a slow rise. So we're going to see this go sideways in some level. But from the 4 hour, this is a good place to be. Now, conversely, when you look at the 1 day, you get a very different viewpoint. So you can ask a different trader who's looking at the same chart, but they're looking at the 1 day time frame, and now all of a sudden this looks really bad, because now you get the short-term average dropping like crazy. It's above the line. The long-term average is still above it. So theoretically, it still has a long way to go. And you can see over the whole year, this has not spent much time below that regression line, or the mean, whatever you want to call it. So fundamentals would tell you that it's got a long way to go down before it shoots up in a huge way, right? You get the same sort of bull run like we're seeing here. I think that this comes down to what you're looking at, what time frame you are thinking about, and also what other data points you're looking at. But it's important to try to prove yourself wrong in every situation, because as much as I would love this 4 or even like a 1 hour, I would love for these to be, you know, the truth of the gospel. You can't just find charts that back up what you think. You gotta the charts have to tell you what they're thinking if you're looking at the charts, which is one piece of the puzzle. It's a big piece, right, in many ways. So I would encourage everybody to look at that. Now with the RSI, which is the relative strength indicator, we talked about this a while back, but very loosely speaking again, if you want to learn more about this, go type in RSI analysis into YouTube. Find technical traders that are better than me at this. I just want to at least open that can of worms so you understand why this is important for making decisions. And when it's up here, that means it's overbought, meaning way too many people own this, and there's going to be a sell-off at some point. And then when it's below this 20% line, that means that it's oversold, meaning it's below the market strength index or whatever your indicator. So if it's below this, typically you get buying pressure up to bring it back up. When it's above this, you get selling pressure to bring it back down. And now we're on the 1 day, and so you get almost a different story in the RSI as you do on the MACD, where this is telling you, well, actually, people are going to really be buying it a lot more. The MACD is telling you, well, the price momentum is going down. To me, that means that there's going to be a good amount of volume, which we're seeing on things like GDAX and Bitfinex, record volumes yesterday. So you can see a lot of volume based on the RSI. The momentum may keep going down on the dailies. And then you look at the engulfing candle stuff, and that's a bear or bull signal. So there's there's no clear definitive answer. And if for you, one of the reasons why this is important for you is when you're writing down what you learned and what you're trying to figure out for next time is not how do you predict the next move? How do you predict what's going to happen next? What you care about is what do you do in any situation? Like all of these can really help you understand what's going on in the market. But the only reason this should help you is that so you can prepare. This shouldn't necessarily dictate decisions as much as it should help you dictate your potential plans so that you can make forecasts and establish strategies that follow these particular forecasts. That's why I don't really do price calls. I share what I do, but I think it's way more important to just get the discussion going. So that's something I've been looking at, I've been learning about, and I think that it's really important. This time frame thing is a huge deal, where if you look at one time frame, it's going to tell you one story, and if you don't, but you got to look at the other time frames, and you got to accept it that what you think may not be right. Right? Even if you want it to be, you don't want this bear to come back. If the charts are saying it is, instead of resisting it or whatever, just ask yourself, okay, what could I do if this happened? You will be much more successful the next time this thing goes up or goes down or whatever, goes sideways. I'm going to bring up Ethereum. I think a handful of you have reached out and asked me why I don't talk about Ethereum that much. And there's a few reasons. The first reason is everything's kind of pegged to Bitcoin for the most part. So it makes more sense to just look at Bitcoin because everything else, whatever. But the other reason is that I'm not looking to accumulate Ethereum because I have a lot and it's stored really far away, and I'm not planning on touching it for a very long time. So I don't really care as much about whether this goes up or down in the next year, because that's part of my plan. Like in 2019, I'll come back and I'll care, but I'm just letting this thing do its thing because 6 months ago, that was my decision. This is a long-term play. I've got my trading money, and so it goes. That's why I don't talk about it. I'm not trying to be biased one way or another. I think one thing that I've noticed as an observation, I don't necessarily agree with this, but this is an observation. Finance types who think about the crypto market think of Bitcoin as the future, right? They think about this asset class. They think about Bitcoin leading the way for a very long time. The more you see people talking about Bitcoin is typically more traders, financially minded people who are investors, people that are in this business for money. The people that are most bullish on Ethereum tend to be tech types, people that are either former developers or many of the Coinbase mafia, a lot of these guys that used to work at Coinbase, they're very bullish on Ethereum because of the technology behind Ethereum. And they see Ethereum as the future, both from a technological and potentially from a market cap standpoint. But that's really the difference. I tend to look at crypto, at least now, as a financial exercise, and I appreciate and investigate the technological in a very large way. But I don't care personally as much about the technological innovation as much as I care about the future in the financial sense. Doesn't mean they're either are equally important. It's just that my lens is financially driven, which is why I focus on Bitcoin. If I was more focused on the innovation of this sector as the growth model, Ethereum would probably be a much bigger piece of this puzzle. We'd also be talking about different stuff. We wouldn't be looking at charts, right? So the thing about Ethereum, I think that this is a decent looking curve right now. The problem is that this isn't really the baseline. You kind of got this whole area in here that it's almost like this healthy looking area got just pasted on top of this weird looking market growth thing here. And this is what happens when you get $250 million ICOs running on your platform. You get these out of control bursts. So I kind of have the same. I look at Ethereum similarly to that Bitcoin. This bull run, and how it didn't go up and down the right ways. That's kind of what I see here. Is that this second 2/3 looks great. This first third does not look great, and it's also I'm not going to do anything about it right now for a variety of reasons. So if you're looking at Ethereum, if you're big on Ethereum, you should obviously get to know this, but this is the area that you should be focusing on from a technical standpoint. And this is what you should be studying and looking at different coins this way that operate in the same sort of mechanics as Ethereum. So I wanted to bring that up. Let's talk about real quickly why we saw a spike. And of course, there's never any, right? There's no like www.whydiditbounce.com. Like, it doesn't know. But I think a lot of it is clarity and certainty on what the heck is going on. And in this case, it's getting the almost full picture of what's happening with the Chinese exchanges. It looks like it actually, a couple of the other ones, there's two things. One, the bans, whatever, won't really happen until the end of October for a few of these, for Huobi and OKCoin. I've got my own theories on that, which I'll talk about in a second. And the second thing, which I don't know if it's in this article, but the second thing is that you can still trade crypto to crypto. It's just that you can't go Bitcoin to Chinese dollars, or their currency over there. So those are the two pieces of news. Whether or not it's good or not is less of an issue, in my opinion, than being able to finally price that into the market. And that's what caused the big spike, which is obviously retracing a bit now, but I think that that's why it was. Now, let's do the classic coin mastery pullback here. Why are certain exchanges implementing this quickly and others are getting more time? Right? Is this really so that people can have a chance to take their money out or do whatever? Probably not, right? It may be a way for people to have more time to sell their stuff off, or more time to implement some new technology or whatever. But I don't know the answer to that. But I would encourage you to think about why are they even giving people a month and a half? Why don't they just shut it down tomorrow? That would depress the price even more. Why are they leaving it open? And that's something that I'm going to come back to next week when I get a little more information, because I'm frankly not sure, but that's an interesting question. I'm wondering why. There's also rumors going around that China may be thinking about releasing some sort of equivalent to Tether, where they have a digital currency, and when that gets implemented back on, these exchanges will open back up, and you'll be able to exchange Bitcoin, but for the tethered Chinese currency, as opposed to the liquid national currency, which has all sorts of implications. You can look up the conspiracy theories behind US Tether in its own right. But I think the reason what happened from a market standpoint is that people there's not a lot of unknowns anymore. And China they can't ban more stuff. Other countries can ban stuff, but China can't. They can't really come out with a whole lot more ammo. I mean, hopefully I don't eat my words on that, but that's what it seems like, and that seems to be why this is bouncing back up. One of many factors, but one of the probably most dominant factors as to why it's bouncing back up, as seen in the volume and in the spike. All right, let's look quickly at Bittrex. If you watched yesterday's video, if you ended up doing the altcoin move, which I'm not saying it's better or worse, it is an option, and I'll walk through that a little bit, where when you buy low on the Bitcoin, typically in situations like this, you're going to get a bigger bang for your buck putting it into altcoins. So if you put it into OMG, for example, which is one I bought, as I was talking about, you buy it, I think I bought it at like I don't know, who knows what I bought it at, but I bought it somewhere around here. And then you look at the jump back on that relative to the jump back on this. This is whatever it was. I guess that's like 15, 20%, if you bought it at the bottom, that is. And then OMG, let's say, maybe like 20% or so, but I would imagine this will keep going up more so than once Bitcoin evens out. That's when you really see altcoins go up. So if you did this, terrific. I personally am not. My kind of trading week is done at this point. The only thing I really care about is if this goes way back down, and then we get into like below 2,900 world. That's when I start to re-examine everything. But for the most part, I'm planning on taking the weekend and not doing anything, because got my orders in, and I got to set up my plan for whatever the next scenarios are. So I'm not going to get too far into this. One thing I will say, which is what I said last time, and this is my own personal preference, whatever you choose to do is your call. But I used to go after the ones that got the biggest drops. And I'm lucky in July, because many of the coins that dropped the biggest still came back, and I got my 30, 40% on them. And then some of the other ones got 50, 60, 70% on them. Some of them were even more than that. I have observed over time that does not hold true as much through these corrections. Meaning, like I said last week, I would rather have a good coin that goes down 10% than a no-name coin that goes down 30%, because the 10% one typically comes back 20% more. That's a higher probability situation. So ARK, actually, yesterday's video, I told you I didn't buy any, and unfortunately I missed this big drop. Kind of sucks. I mean, I had this order, but it was over here, and I didn't reset it up because it was still up here, and we were seeing this. It was like when I shot this video, it was, kind of hanging out in this 110 area, and it didn't look like it was going to drop big, but it did, and I missed that. Right? If I had had some buy orders, I would have got it. But look how fast this thing popped back up. I mean, it's right back up to 103. That's almost a 25% return in a matter of hours, which that's smoking. And based on how this thing's been performing, I think it's a little oversold right now, but it's on a very good trajectory, so to speak. Versus if you looked at some of the other coins that maybe had bigger drops. I haven't even looked through all these, so I don't know exactly what's what, but I don't really have one way or another about trig. I think some people love it, some people are wondering about it. I personally have not done my research, but it had a huge drop and it did not recover the same way. I guess from a percentage standpoint, that's actually pretty good. Now that I say that, I'm looking at it, but overall, I'm not sure that this bullish curve looks as good as ARK from my perspective. Like I said, I'm not saying that's true or anything, but I tend to gravitate towards good coins like OMG and ARK, and Neo actually I think is primed for some good stuff, as opposed to going after the big ones. Some people they nail it and they make a lot of money going after the big drop ones that come back the biggest. That's just not really my strategy. So whatever works for you, that's what you should do, and clarify that strategy, execute it, have it ready for next time. But like I said, I'm not really focused on trading for the next few days. I'm chilling. I'm just going to let this thing unfold and see what happens. Now, the last thing I want to do, just because it's Friday and I think it'd be helpful for you guys, this is a really good episode on Tim Ferriss's podcast. If you've never listened to Tim Ferriss's podcast, it's really good. I really like it, at least. And you can go download it. Go to tim.blog. That'll take you to his website. And this is the most recent interview with a guy named Ray Dalio. If you don't know who Ray Dalio is, he is a hedge fund manager for Bridgewater Capital, which is one of the most, if not the most successful hedge fund of all time. Maybe for like the longest period of time, like 40% returns a year or something insane. And Ray Dalio pioneered a lot around diversification that gives you insane gains over the long haul. Right? Diversification is often considered to be very boring and about risk mitigation. And what Ray Dalio did, he pioneered, is that you can diversify to reduce your risk, but you can also still get the upside. And I think you guys will really enjoy this episode. Tim did not ask me to do it. I mean, this is purely because I think you guys will get a lot of value out of it. The first half is more about life and him as a person. So I would encourage you to listen to the whole thing. But the second half is about investing. And what he talks almost exclusively about is the importance of making good decisions, of psychology, of having a plan, of a lot of stuff that we talk about here that you guys bring up in the comments and everything else. And I think that you'll find that the principles he uses to make, he manages $160 billion. And the principles he uses to make $160 billion are the exact same ones that you can use to build your crypto fortune. And even if it seems boring and insignificant, when you hear him talk about this stuff, I think that it'll help you a lot. I think that you will, if you like this YouTube channel and podcast, this is the kind of stuff that I think you would really enjoy. And I would definitely recommend the hour and 20 minutes of listening to it. Tim's a great interviewer. He asks really good questions. So go check it out, tim.blog. And then it's the most recent one, Ray Dalio. And I think that you will really, really enjoy it, especially on this weekend. If you want to take a little time to chill, whatever it may be, so we can hit the ground running in the future. And we're just going to keep an eye on this. So if this is your first big down cycle, congratulations on getting through what hopefully is the first of the main phase. But at least we got a little bit of a break. So good stuff. And yeah, in the meantime, if you're not subscribed to this channel, make sure you hit the subscribe button, hit that thumbs up button, the bell, the whole thing. And I will catch you guys next week. All right, peace out.